Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors. Today is September 6th. First off, great response to last week's video. We were surprised at all the great questions and comments on the use of our quantitative buy-sell signal and how it is used and incorporated in our broad management and positioning of portfolios. So I thought I would spend 2 minutes on that. One thing to keep in mind, at Cumberland, we don't just talk about diversification by security. We focus an awful lot of time and planning on diversification of strategy. There's an argument that's been going on for 25 years. It's not new, although you see it in the news constantly. Passive investing versus active investing. What are the pros and cons? Which is better? Are there times to be active? Are there times to be passive? We embrace both. And it's an approach that, while maybe a hybrid approach, really is the best solution for how we attack allocation in equity portfolios for clients. So in a client allocation, we very well may be using a passive approach, using the S&P 500, mid-cap 400, maybe the small cap index, although lately we've been leaning very much large cap, and that's been the place to be. We may rebalance between those indexes, but stay fairly passive. We'll always want to complement that passive approach with a sleeve of active investment management. We don't buy that at no point can passive investing be defeated. There are times and places where I think you want to be a little more active with a portion of your money. We talk about buckets and baskets here. How much of your money is in the passive bucket? How much is in the active bucket? How is that active bucket managed? That's what you want to know as an equity investor. So the questions came in on our quant signal that I mentioned on the close of business August 27th. We got the first buy signal since the spring. That caught us a little bit by surprise in terms of all the negativity that was going on. But that signal was followed up by another buy signal on the following day. When we get those two signals together, we're very comfortable getting 100% long in the market. So how do we use that signal? When we got that buy signal, we had been sitting 20% cash in the U.S. equity portfolio. We moved 10 immediately into the S&P 500. 20 immediately into the S&P 500. But we also made one other move. We sold our defensive sectors, utilities, staples, and real estate, and replaced them at a 10% level with 3 aggressive sectors: technology, consumer cyclicals, and industrials. That's paid off nicely over the last 8 sessions. As you've seen, defensive sectors just pull back, not quite keep up on a relative strength-wise with the more aggressive sectors. That signal, thus, dictates to us cash positioning. What will we do if we get a sell signal in our quant piece? Normally, we're going to take 10% out of the market, and another 10%, those 3 aggressive sectors, will move to our 3 defensive sectors. We don't know what those 3 defensive sectors will be right now. We use relative strength to identify what's holding up. Where are we seeing a slower drawdown? Where are we seeing higher lows? So it's a puzzle that we enjoy. We think we can add value and do add value to the active piece of clients management. And as long as we can outperform with that slice, that 20 or 25% in the overall U.S. equity portfolio, and outperform taxes and trading costs, we're more than willing to embrace a portion of active management. So that's just a quick note. What do we like in the market right now? What don't we like? We like the fact that those August lows of mid to late August were higher in the S&P than the late May, early couple of day June lows. Higher lows are very, very important to us. We pay more attention to higher lows than we do higher highs. Higher lows tell us that supply or selling is drying up. As nasty as the headlines were in August, the market was still able to make a higher price low than just 2.5 months before. That's a positive to us. Less sellers. What would we like to see some improvement? We're going to get right back to it. Small caps. They continue to struggle. Mid caps a little bit better. But if we can get small caps to get a bid, I think you'll see a broadening of sector strength and be able to carry this market a little bit further. We're really going to try to focus on sectors next week. What do we see within ones working? What would we like to see in ones that have been trailing? So everyone have a great weekend. I hope this was helpful. Keep in mind, we always get back to questions and comments, inquiries. Feel free to reach out either by phone or by the email that's on this video. Appreciate it. Have a nice weekend.